For 25 years, one rule stopped millions of regular people from day trading stocks. It didn't matter how smart you were. It didn't matter how good your strategy was. If you didn't have $25,000 sitting in your account, you were locked out. That rule is now officially dead. On the 14th of April 2026, the SEC approved the most significant change to retail trading rules since online brokers eliminated commissions. And I'm about to break down everything what just changed when it kicks in, and how you can use this moment to start building real wealth from the markets. Stay with me, because this affects every single trader in America. Welcome back to the channel. If you're new here, welcome. We talk about smart investing, tools, and strategies to help you build real wealth. If you have not subscribed yet, please do. It genuinely helps this channel grow. Let's start and let's talk trade. Let's start at the beginning, because if you don't understand what this rule was, you won't understand how big of a deal this change actually is. The pattern day trader rule, or PDT rule, was born in 2001, right after the dot-com bubble burst. Here's what happened. In the late 1990s, millions of regular Americans opened brokerage accounts during the tech boom. They were day trading stocks on margin, meaning borrowed money from their broker with almost zero understanding of risk. When the crash hit in 2000 to 2001, accounts blew up by the thousands. Brokers were left holding the bag on unpaid margin calls. So regulators stepped in. FINRA, the Financial Industry Regulatory Authority, created the pattern day trader rule to put up a wall. It wasn't the hedge funds, it wasn't the Wall Street professionals. It was you, the everyday person, trying to learn trading with $2,000, $5,000, maybe $10,000 saved up. You were told, not enough. Come back when you have $25K. And here's the dark irony. The rule designed to protect beginners was actually pushing them into more danger, because when traders finally hit $25,000, brokers would immediately give them 4x leverage, 4 times their account in buying power, far more firepower than any beginner should touch. Okay, this is the part you might have heard about by now. Let's talk about what actually happened and how does it impact all of us who trade daily. 25 years, one rule, and on April 14th, 2026 it's gone. Now let's talk about what exactly replaced it, because this is where it gets interesting. The old PDT rule was like a velvet rope, get to $25,000 and you're in the club. The new system is fundamentally different. It's dynamic, real-time, and based on actual risk, rather than an arbitrary dollar figure. Here's what changes under the new framework. Minimum margin account balance drops to $2,000, the same threshold that already exists to open any margin account. Intraday margin calculated in real time instead of a fixed dollar cushion. Brokers will run dynamic risk checks throughout the trading day based on what you actually hold. Realized profits immediately apply to intraday buying power, meaning if you make money on a morning trade, you can redeploy that capital the same day. Brokers set their own higher internal minimums. Some platforms may keep a $5,000 or $10,000 internal threshold, especially for leveraged products. This is the section I know you came for. How do you actually use this rule change to build real, lasting wealth? Let me give you a framework. Step 1. Master risk management first. Before you make a single extra day trade, you need a rule. Never risk more than 1 to 2% of your account on any single trade. If you have a $3,000 account, your max loss per trade is $30, $60. This isn't optional, it's the difference between surviving the learning curve and blowing up. Step 2. Start small, compound consistently. The new rule doesn't mean you go big immediately. Start with small position sizes. Focus on consistency over big wins. A trader who makes 1% per day, 20 trading days a month, on a $3,000 account and reinvests that profit is building something real. Compounding is your actual weapon here. Step 3. Choose your strategy and stick to it. There are dozens of trading strategies. Momentum trading, gap and go, VWAP trading, reversal plays. Don't try to trade all of them. Pick one, backtest it, practice it in a paper trading account, and then deploy it live with small size. Consistency beats complexity every time. If you want to learn any of these trading strategies in details, please let me know in comment box and I'll be happy to post a detailed video with real-time market examples. You can also join our free-to-join for our subscribers Discord channel for all daily trading related discussion. Links in the description. Step 4. Treat it like a business. Track every trade. Write down your entry, exit, reason, outcome, and emotion. A trading journal is not optional if you're serious. The traders who build wealth long-term are the ones who analyze their mistakes and cut their bad habits faster than everyone else. Step 5. Understand the new margin system. Under the new rules, intraday margin is real-time. That means if your positions move against you hard and fast, you may get a margin call midday. Know your broker's intraday margin requirements before you trade. Know what your maximum buying power is at $2,000, $5,000, $10,000. Don't get caught off guard. Step 6. Use the cash account as a training wheels phase. Even though margin accounts are now more accessible, consider starting in a cash account to force discipline. When your money takes one day to settle, you naturally become more selective about your trades. That selectivity, that's skill being built. The real risks nobody is talking about. I want to be real with you here. Most YouTube videos about this rule change are going to hype it up like it's a golden ticket. I'm not going to do that. Risk has shown. Volatility will increase. More traders with unrestricted access equals more short-term activity in smaller stocks and microcaps. That means faster, sharper moves. Wait for experienced traders. Dangerous for beginners who chase bumps. Risk 2. Brokers may tighten their own rules. FINRA and the SEC set the floor, but individual brokers can set higher internal minimums. A broker like TD Ameritrade or Fidelity may decide their minimum is still $10,000 or $15,000 internally. Read your broker's fine print. Risk 3. Leverage is still dangerous. The 4x day trading multiplier is gone, but margin still exists. Margin amplifies both gains and losses. A 10% swing against a 2x leveraged position wipes 20% of your account. Respect leverage. Always. Risk 4. Emotional trading will cost you. The biggest hidden tax in trading isn't commissions, it's emotion. FOMO, revenge trading after a loss, over trading on a winning streak. None of that changes with this rule. Discipline is the edge. Always. Let's zoom out for a second. Because this isn't just about your trading account. This rule change is part of a broader trend toward democratizing market access. The elimination of trading commissions in 2019, the rise of fractional shares, the explosion of retail trading apps, and now the death of the $25,000 gatekeeper. Wall Street's advantages are shrinking. Data, speed, capital, those gaps are narrowing for the everyday investor. For the first time in 25 years, a 22-year-old with $2,000 and a laptop has the same legal right to actively trade as someone with $250,000. What they do with that access, that's the question. The market doesn't care about your age, your background, or your bank balance. It rewards preparation, discipline, and risk management. Always has, always will. This rule change is an opportunity. Use it wisely. Alright, let's recap what you just learned. The PDT rule was created in 2001, requiring $25,000 to actively day trade in a margin account. FINRA approved its elimination in September 2025. The SEC approved it on the 14th of April 2026. The new minimum is $2,000 with real-time intraday margin replacing the old fixed system. The earliest effective date is late the 4th of June 2026, but full broker implementation could take up to 18 months. This is a massive opportunity, but only if you approach it with a strategy, risk management, and discipline. If you found this valuable, hit that like button right now. It seriously helps this channel more than you know. Subscribe if you want to be the first to know when brokers start rolling out the new system. I'll cover every major update in real time. And drop in the comments. Are you excited about this change? Or does it scare you? Let me know. I'll see you in the next one.